Today I would like to teach you that how the volume footprint is useful for studying the charts along with the price action. So you need to understand the basic things like you know the words which I'm using in the chats. You people need to understand that. So let us try for today's one. Okay, so what actually I look for the in the volume footprint. Okay, so basically volume footprint will tell you that how much the people are aggressive to buy or sell. So it will tell you that each and every price, okay, the place, how much volume is trading and how many buyers are there, how many sellers are there. So you need to understand that how much buying is happening or interest is going on. So first of all, you need to understand what is the delta. Okay, whenever I'm placing the charts, okay, so you people can see that. Okay, you people can see that these delta values, right? Okay, so if you see here, the previous candle 64 million contracts were buying in the Nifty, and it is a daily candle, and delta was 23. It's clearly saying that the buying aggression was down. And when compared to this 18 million, so it is clearly convincing that buying was calming down. So you need to understand how the opening was there. Based on that, we will take the trades. Second thing, you need to understand that what is the value lines. So this is small arrows you're able to see for each candle, right? This is the value area low and this is the value area high. So 70% of the volume for this particular candle traded here. Okay, and you are able to see the white color boxes here. This is called as a POC, point of control. So out of this 70% volume, this is the price most of the buyers and sellers agreed to trade, and most of the volume was traded. And you are able to see that small green boxes, okay, these are called as imbalances. Okay, imbalances, two types. So one is buying imbalance and another one is selling imbalance. And buying imbalance or selling imbalance calculated diagonally. So here for the particular price, okay, 2.42 million people are ready to sell and 9.41 million people are ready to buy. So when compared to this, four times means 400%. So usually I use the imbalance of 300%. So 300% more buy orders are available. So that is the reason it will print a small green box here that is called as a buying imbalance. The same way for the selling imbalance also, but always it will calculate diagonally. So here see, buyers are ready for 35k contracts and here 27.24 million contracts means 272k, we can say that. Okay, so that is the reason the imbalance was printed here as a red color box. So imbalances are very important because the aggressive buying or selling activity where it was happened, starting of the candle or top of the candle, which will let us give a clarity. Okay, even the price action is 70% correct, but 30% you have to understand with the volume footprints. So and this POC is shifting up, think like that here. See, it was the low of the candle POC, and here POC is little bit high and little bit high. So you have to interpretation of buy side. The same way you have to understand the POC, how is it is shifting. Okay, so based on the shifting and this positive delta, so total buy volume minus total sell volume is the delta value. Okay, so always buy volume minus sell volume. So positive delta means it's a buying pressure. Okay, aggressively buying for that particular candle. It is a 1 day candle, so 1 day it is a buying pressure of 64,000. So here also you can see that minus 123 million. So the people are aggressively selling, and here minus 34. So minus 123 is greater than minus 34. So selling aggression was calmed down. So this is the way you need to understand that. So sellers were not so much active, and you have to understand the POC. POC is shifting up. So based on these two candles, next day I look for the buy side. But not just like that I will go for a buy. I will wait for the first 15 minutes and then I will start look for the opportunities with the ITM options. So based on this, for today's Nifty trade, what is there is 64 million, 23 million, 18 million. It is clearly saying that buying was not that much interest. So we need to look for selling opportunities are more, means 60%, 40% buying opportunities. And based on the POC, if you see that it was up and flat. So this is saying that POC didn't give any much information, but it is clearly saying that either sell or neutral. And now if you see the previous candle, selling imbalance is there. this is telling that okay, sellers are active and aggressively selling in this price. So if this price of area was not respecting for the this day, so obviously we need to look for the sell side opportunities. So based on this footprint, I'm able to look for the sell side opportunities. Anyway, open high, everyone knows that it is the sell opportunities. So you have to look for the sell opportunities. Based on that, I analyzed 26,300 put. Okay, so if you go for 26,300 put of the weekly option, which has a lot of liquidity, means more people will trade and lot of volume will be there. So volumes will be the footprint for us. Okay, so first 15 minutes footprint. So I mentioned today also options are the instruments for the institutions to sell. So what you need to do is you have to look for the buying opportunities when the institutions are ready to whatever they shorted they want to cover it back. That is called as a short covering. So first they sell the option contracts and later they will start buying. Think like that, they sold the options and they think that okay, the price will go down, the option price will go down, but it didn't go down well. So what they will do, they will start buying it. Think like that, the new buyers are added at the same time, which will cause the explosion. That is called as a gamma explosive. Okay, gamma explosive is a different concept, I will let you know later. So first you need to understand that if the institutions are covering shorts and at the same time buyers are adding, it will fuel the price. So that time we have to look for the options to buy. And second thing is when you are buying the options of ITM, always look for that some 20 to 30 points is more than enough with a small SL of 5 to 10 points or something. So risk to reward ratio is very, very important whenever you are trading. So now come back to the topic, the footprint, how I will analyze this. See, as I said, the first candle was delta 4.81 million. So these many contracts they were sold, but the candle was closed above the value area high. And multiple imbalances of buying side is there. So it is saying that someone is buying here. But I do not like just like that I will jump it. I'll just wait for the next candle to print. So next 15 minutes, if you see that 4.81 million to 316, it's clearly convincing me that these many contracts were down from here to here. So the people started buying it. Okay, in this particular candle 316K, so the people started buying it. Maybe whoever is sold, they maybe started buying it, but the POC is saying that still sell side only. But the yellow color boxes here, high volume, buying volume was there and high selling volume also there, violet colors, and POC is shifting down. So just wait for that. Okay, so now what is the next step? Here this candle, see 2.17 million, negative 2.1. So again the people are aggressive and they're selling in this particular 15 minutes option contract. They thought the Nifty put will go down. Okay, but you need to understand the fractals in the sense of high, low, high. The POC fractal, this is called as a POC fractal. So this is the POC of the particular candle is here where the most traded volume happened between the volume area high and volume area low. And this is also, this is the POC down and up. So this is called as a fractal POC. And first candle minus 4.81, second candle is minus 2. So 50% of the volume is reduced. That's clearly intending that the buyers are stepping in. And 316 here, it is second hinting, it is saying that slowly they will enter, they don't enter just like that, so that you will be caught up. Okay, so next candle delta is saying that okay, minus 3, and next candle minus 236, 3 million 236. So the sellers are losing the control on the option selling. So when they're not able to sell, and what will happen for the whoever is sold here, so they have to cover it, right? So what you need to do is once you found the POC, even you can draw the POC using the volume profile, which is a free indicator available, but I do not want to like more and more lines, so I just bought the premium subscription. So POC fractal, whenever it is happened with the delta is convincible values, so take the imbalance along with the POC, whichever is low side. Okay, because we are planning to go for buy side, right? You have to take for the low side. So this is the low side, just extend the box. And this box was touched around 10:30. Okay, here selling aggression was down 10:15 to 10:30. This candle is convincing me that selling aggression was gone. And previously POC fractal is suggesting me to a buy. So then I look for the 5 minutes candle. Okay, so if I go for the 5 minutes candle of same 10:30, what the candle is printing here with the footprint, see 1.15 million to 1.6 million selling were very aggressive, but someone is selling means someone is has to buy. So who is buying here? Institutions are buying. You need to understand that. Okay, sell those many sell contracts, someone has to buy. Okay, you are selling means someone has to buy, you are buying means someone has to sell. So here the candle negative delta suggesting that aggressive selling, but the imbalance is saying that buying, and yellow box is clearly saying that you are in the aggressive volumes are buying, and this is a pin bar again, and which is rejected from the previously 15 minutes footprint POC. Okay, footprint POC and imbalance. So this clearly convincing us to go for a buy of this candle close. So just converting into the normal candles to understand better. Okay, so now if you take the buy here of this candle, okay, so now whatever the candle you are buying it, just put the low of that particular candle as a stop loss. A stop loss is very very important. And if you take three candles also, see 27 points you are able to capture here. Okay, so how much amount we are using here, I do not consider those things, but I just consider that you just with the risk of the 6 to 7 points max to max, and you are capturing. And this volume footprint analysis is very 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 good when you're doing it on expiry days, but you need to be very very fast for triggering the uh, orders. And you need to use the tools I use, like one click one of the software which will automatically trail my SL, and which will hit the target or stop loss automatically exit at the market prices. Okay, so you need to spend some time to learn the things. So today learning is how to analyze the footprint for the volume options. Okay, based on the volume how to buy the option, or who's selling and how sell aggregation is. So you first, the conclusion of this video is you need to understand the POC and imbalance, buying imbalance and selling imbalance. And then you have to understand that value area high, value area low, and delta values. So based on the delta values, it is freely available on the trading view. So based on the delta values, how to analyze the next day move or next candle move. Okay, and based on the POC, how to analyze the next candle. So we will analyze based on the delta, and based on the what to say, value areas POC, how it is moving. So based on that we'll decide. So after deciding, once you decided the trend, that is called as a bias. So once you are good with what is your bias, is it go up, neutral, or down? If it is go up, look for the ITM call options. If you feel that it is going down, you have to look for the ITM puts. If it is a neutral means, if you do not have the capital, use the iron condor option selling, means buying the two OTMs, and in between two ITMs selling. So you will have a lot of videos in YouTube. You have to spend what is iron condor or something, which is easy to learn. But present thing is how to predict the next candle. That is what my intention is. So for each and every stock, there is a hidden footprint will be there. Price action will tell us only 70% of the move, but rest of the 30% move you can confirm with the footprint. So lot of traps will be there. 70% of the times the trap will lead the market. So you need to identify the trap so that you will get for the less priced options or futures or cash market with a small SL and big reward. That is the way you can double your capital. So that is the reason not only the footprint or not only the indicators I use, most of the times I try to use the volume footprint. Okay, that indicator designed on that, because the until and unless people doesn't have the premium subscription, you cannot view this. So that indicator also almost 80% of the work will do the same for you guys. Okay, so you people need to understand how to use the words whatever I'm mentioning in my group. Okay, so do not blindly trade and risk your capital. So I always suggest you to trade cautiously. One or two trades are enough for us to earn some 3 to 5% on your capital. Okay, thank you.